Hey, good afternoon, everyone. So what I'm going to talk about is just give us a little bit of a whistle-stop tour of some of the technologies which we think are going to become very influential in fintech. There's a long list of possible candidates, and of course, the one thing you know when you start doing predictions about technology, you'll be wrong. I think the most important point is when we look at the sort of supporting platform of technology, so this is things like processor power and connectivity, wearable devices, all of this, what we see is a very fertile ground for change. And in fact, I think it's reasonable to say that the financial space is about to see something that some people would call an iTunes moment, where suddenly incumbents that have been around for a very long time, practices which have been well established, are suddenly up for question. And what we may see as part of that, obviously, is new services and new players, but we'll also see some existing incumbents make that transition and use their brand and market presence to come out very, very well from that change. Now, that is normally predicated on those incumbents understanding that there's a change going on, and for the ones that don't, that is what makes the opportunity for the new players. It's not just about organizations, though. Some of the technologies I'm going to talk about are capable of changing geographic positioning and relative representation. And it's also going to be a major challenge to regulators, how they actually address this. Fintech is a sufficiently large potential sector in the UK that these changes are also going to affect things like employment and the required skill sets that we're going to need to really grasp the opportunities here. So I've decided to talk about 4 technologies. The first one is what we'll call data-driven, so things like machine learning, data analytics, and big data. The second one is the area of digital currencies, Bitcoin, blockchain, that sort of thing. And of course, we're going to have a panel on that in a minute, which will have some people far more expert than I on it. And then we're going to talk about digital payments, mobile payments, peer-to-peer, the idea of social lending, things like that. And then the last one is cyber security and compliance. These, I think, are probably the 4 most key areas at the moment. Let's talk about machine learning. So there's been a lot of stuff in the press about the machines taking over and the end of mankind and so on. Well, before that happens, if it ever gets there, what we're seeing is quite a revolution going on in many different areas. If you think about the Industrial Revolution as being the replacement of muscle, what we had when we saw the 60s and computing come along was the replacement of simple thought. So, for example, you no longer had to have a ledger clerk totting up columns to write a number at the bottom in a ledger. A computer could do that very well. What we're seeing now is an almost silent but massive change, which is the next revolution, which is actually dealing with a lot of what's sometimes called middle-class jobs, jobs that require a little bit more understanding, a little bit more training, and different skill sets. This is actually definitely happening. It's affecting many sectors, and things like the effect on employment. So we see, for example, various reports for Obama in the US talking about the hollowing out of middle-class jobs. We also, perhaps that might be too pessimistic in that those kind of analyses tend to forget the creation of new types of jobs. In the 60s, we didn't realize we'd have so many IT people. So what sort of areas are these machines going to deal with? Well, you think about things like contract generation, contract analysis. The new technologies can do this sort of thing very well. Obviously, already showing themselves in areas like trading, being used in quant hedge funds, things like that. But if we move on to other areas like analytics and optimization, the lesson we learn from other industries is those like a Tesco that apply optimization techniques can very quickly start to change the dynamics of a marketplace. And so what we're going to see is the use of much more personalized analytics around our customers. Things are going to have to become very customer-centric because of this. And because of the power of the technology, data is going to become everything. Being able to fuse data from multiple sources so that you can feed it to these algorithms or to the machine learning systems and get a return will become a key strategic advantage. If we move on to blockchain and Bitcoin, one lesson that I've learned over the years in technology is that technology goes through hype cycles. So suddenly an idea appears and everyone gets very excited. Then after a little period of time, everyone gets very dismissive. And then after another period of time, it reaches its actual stable position going forward. When we talk about things like cryptocurrencies, we're very much on that roller coaster at the moment. It's very hard to work out exactly where they're going to land. Some of the reasons that people originally got excited about them, some of that pure speculation, some of it things like the untraceability, obviously are now starting to unwind. We've seen from recent trials in the US just how untraceable the untraceable can be. We've seen that what goes up can come down and the issues about volatility. Those are sort of sideshows. The bigger issue here is the concept of a new kind of transferable money. But the thing that's really exciting about the technologies behind a Bitcoin is the concept of blockchain. And we'll be talking about this more in a little while, but it's basically the ability to create a trusted understanding of a sequence. Now that could be a document or a set of contract changes or a ledger or pretty much anything, and do that in a way which is now distributed. So all through history, we've traditionally addressed that problem by having a central register. That, in effect, is what a stock exchange is. Now, that can be completely distributed. That is going to greatly change the way in which some of the incumbents have control over what's going on. And I suspect we're going to see blockchain-type approaches used in all sorts of areas where we actually want to have a reliable record or a reliable understanding of what's gone on. Mobile, digital payments, well, there's not so much technology here. Technology is more the enabler. And we have some big issues. For example, we have a concentration of power in some of the very large tech players. If Apple Pay were to take off, what do we see about those tech players challenging other sectors? And then in some of the areas, we have to be careful not to confuse the implementation with whether an idea is new. If we look at something like peer-to-peer lending, that's the basic principle when a group of merchants got together in the City of London to finance a ship to go out and get goods. There's nothing new in peer-to-peer lending. What a technology does is it enables it on a large scale. So then you have to ask yourself, what actually happened in the historic case? And by the way, when you're looking at technology, looking at a historic case is an incredibly useful way to understand the future. Well, various things happened, various scams happened, and we started to get it regulated because we didn't want people losing their money. And now we have a whole set of regulations around raising money from people. If you're a stock market, prospectuses, all that sort of thing. It is highly likely that with peer-to-peer things like Kickstarter, for example, once we have a few disasters, that there will be calls for regulation. Then the thing starts to converge with traditional models. So the lesson from this is it may actually be the interest of the fintech community to actually have a little bit more regulation early on so that they can actually keep a differential from the current situation. By the time we see moms and pops getting scammed into investing in perpetual motion machines, there will be a call for action. And I think Wonga is an interesting example of how sentiment can turn in these situations. So there, it's not a technology issue, it's one about culturally not going too far and going at the right speed. And then the last area I want to talk about is cybersecurity and compliance. People think they know what cybersecurity is about. I think they're massively underestimating the problem. You think it's about firewalls, you think it's about people hacking your website, looking at your emails. When you go in with sophisticated tools to the FTSE 100, 80% of them are already infiltrated at a point where there are outside players, either governments or sophisticated crime operators, that are in effect in control of their network. The attack that will be a massive issue for anyone in the financial sector is not defacing a website, it's a confidence attack. Imagine a piece of code that pops up for 2 milliseconds every 6 months and just starts to change ledger entries. And it does it quietly enough and it does it long enough that you can no longer trust all the backups. Pull that out and you bring out confidence from the financial system. The risks are much more profound and the technologies on the attacking side are getting more and more advanced. And the most important thing is the old model doesn't work. The idea that you can build a wall, a firewall, any kind of wall, doesn't work because every morning you allow large numbers of people through that wall. That means that the issue is about not protecting your network, it's about what's actually going on. And that's going to require fundamental different technologies, and it's not going to be optional. Similarly, compliance. What we see in the financial world is everything is getting faster, it's getting more complex, and it's getting more nonlinear. And if you look at a system like that, where there's no overall control, because there's basically a free market going on, it will become inherently more and more unstable on an inherently faster and faster timescale. So we will have no choice. We will have to use technology around compliance in order to understand what's going on, in order to police what's going on, and in order to create stability. And I think that is a massive opportunity. It sounds very boring, but in terms of opportunity for new technologies and new companies, I think the compliance space is extremely exciting. So, what are the challenges in all of this? Well, for the incumbents, they have to change some of their thinking. They have to be very much more customer-centric. They have to make decisions about where the technology can and can't be used. If you ask a machine learning system to vet loan applications, it will be very, very good at it. But it might come to some conclusions that are ethically unacceptable. It might decide that people from a particular country are more likely to default. How do you handle that? What's the policy going to be for that sort of thing? How do you treat one of these machines when they get something wrong? Can a machine discriminate? Big questions there. The incumbent technology stack in many current players is not up to the next generation of applications. Sort of trying to stick a mobile interface on the front of it, we're reaching the end of that process. That means some brave technology decisions are going to have to be made to be ready to move to the next level. At the moment, everything is in silos. In a data-driven world, the power comes when you pull those silos together. But many of our current institutions are organized along those silos. And then the last and perhaps biggest area is regulation. You want regulation to be moderate enough, fluid enough, adaptive enough to allow these new industries to take off and for the UK to lead them. On the other hand, if things start happening that bring down confidence, they will kill those new industries. That is going to be a significant challenge. So, amazing opportunities, amazing things happening. I think the UK is in a great position. We're good at fundamental technology. We obviously have an amazing financial services sector. I think we're starting to see the regulator in the UK understand they have to think a little bit differently about some of these new ideas. And by comparison with many of our competitors, we have a good skills base. We could certainly do with more, and we need to think about that for the future, but we have a lot of the prime ingredients here. But we mustn't rest on our laurels. With these kind of technologies, you don't have to have a city of London. It can be distributed. It can be distributed around the world. So we have to make sure that we're putting in place what makes it attractive to be here. Most importantly, we have to think about cybersecurity as core business. And a regulator needs to think about technological compliance. What this all comes down to is we're seeing three things come together. And E.O. Wilson, Harvard biologist, has a wonderful quote which sums this up. He says that we have the emotions of the Paleolithic. So we have love and hate and fear and greed, all those things that drive markets, just as we've always had them. But he says that we have the institutions of the medieval. A lot of the way in which we're organized around the nation state no longer seems to work very well. But the last one is the killer. We have the technology of the gods. Thank you very much.